For a market like India, and you've tracked this market for years now, how many times we've seen this kind of a distribution stroke time-wise correction? How many times do you think that has occurred in last 10 years, and what has happened after that?
Well, again, if we just take a step back and we look, we start at the 2009 low. We had over 170% gain off the 2009 low. It peaked in 2010. It took just over 4 years to consolidate that in a range. And within that range, you saw price swings of 20% down, 20% up.
In terms of the turning point for commodities will come. Crude is not at 130. It's already down from a bear market, from a bull market, it has moved to a bear market. Where is gold headed and where is crude headed?
Yeah, so let's deal with crude first, because last week we did see a break below $80.40, which was a key short-term support level. That does now extend the downtrend that you've seen develop off the early 2022 highs, and it suggests a move back towards the $65 area, which is basically the lows that you made in the first half of 2021. So that is the downside risk on the Brent side. Gold, on the other hand, we've seen a trading range since August 2020, and that trading range has developed below this 2100 resistance zone. And the setup now is for gold to at least test that area, and a break above 2100 would give us a fresh upside target and breakout and give us a target level of 2500 to 2550. So we're watching gold quite closely for a break above that 2100 area and a move up to 2500 at the end of the day.
It's quite an upside on gold from 2100 all the way to 2600. But Laurence, when we spoke with you at the end of last year, we were talking about a Nifty target of around 21,850 to 22,000 thereabouts. Do you think that's got shifted materially to, let's say, end of next year?
Yes, I think as far as the time horizon goes, the fact that we failed to sustain the breakout in December and the fact that we've pulled back into this trading range does postpone rather than negate that upside target. And like I said earlier on, I think this ranging action lasts another 2 quarters at least. So yes, those upside targets are pushed down the track.
Laurence, if one has to, let's say, take a 3-year view from here till, let's say, 2026, middle of 2000 or beginning of 2027, do you think Indian equities, the long-term charts still indicate that there is money to be made here? This market will do exactly what it did after these brief patches of consolidation?
Yeah, absolutely. Like I said earlier on, the longer-term structure hasn't been damaged at all. And this trading range then would set up a platform for a resumption of that trend. In the short term, though, it's more about tactical swings and rotations within the underlying sector. But from a longer-term side, it's still a positive setup for, a push through 20,000 and move up to the 21,800 area and potentially even higher than that. So longer-term trend still intact. It's just about digesting the gains of the 2020 lows. And the common pattern has been a sideways range over a period of time.